What is it, 78 headlines you have to digest in 3 seconds?
Yeah, absolutely. But you do have some good news and bad news. The good news being that trading is better than expected, both in fixed income and in equities. The bad news is that provisions for loan losses are a little higher than expected. And as loans are growing, you see them growing at a slightly slower clip than in the fourth quarter, at 5% growth in average loans. That compares to 6% last quarter. So the question is, are they going to get that loan growth that Wall Street was hoping for? And are they starting to prepare for a tougher time ahead?
But let's cut to the chase here. What people want to know is every report Paul Sweeney and I have is deal making in your Wall Street, Sonali, is flat on its back. Is it?
Well, it's flat on its back, Tom. But with that said, debt underwriting, where JPMorgan is the behemoth in the room, debt underwriting is expected to reach about $100 billion this month, which is after the first quarter. So the Jamie Dimon outlook on whether corporations are preparing their war chest for the tough times ahead is going to be
okay. That's Sonali Basak talk for cutting costs. Do you see anything in your first blush of these headlines that 240,000 people or whatever is going to become 230,000?
No. Well, so JPMorgan is one of the few banks that's been increasing headcount, not cutting them as we see as some of the peers here. Jamie Dimon last quarter did telegraph the costs ahead, but I think what Wall Street is missing here is how much of those costs are variable. A question for Jamie Dimon is minimum wages. He just said in his annual letter that the government should be increasing minimum wage across the board. When we asked him the same question here at Bloomberg Television, he said maybe. So are the costs going to go up across the board for his employees continuously, or is he going to hold them stable?
Looking at the shares, they're down about 1.6%, fluctuating back and forth between a low of nearly 2% and then going up to negative 1.2%. I'm looking at first quarter investment banking revenue in particular. The banking sector we've been talking about coming under pressure, especially the look ahead, given the fact that people are worried about rising costs and what that will do, coming in at $2.06 billion versus the expected $2.21 billion, given the fact that the shares are already down 16% this year and that the knee-jerk reaction is lower. What is the most important data point that Wall Street's watching?
Well, given that the stock is not reacting well to these numbers, even with the trading beat, Lisa, that nobody really expected, well, it shows you that they're more worried about the loan story here. Investment banking, the pipeline will be important. What my sources are telling me at 3 of the top 4 banks is that people are prolonging deals. So that means they're going to go back to looking at them later this year, perhaps September, when things perhaps settle down a little bit. So without that worry about investment banking in particular, the loans here and them not growing, and also the worry about the outlook of the consumer is going to be an overhang. JPMorgan also trades at 1.5, 1.6 times its book value. So that is more expensive than the other banks. Is that fair value, even with that decline? I think that's the big question that people will have to answer.